Support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries.
Well, we will do our best to refrain from using cheap metaphors about the extreme and early onset summer temperature and the economy. However, as the sixth year of commercial expansion continues, it couldn't hurt to get a sense of how business, politics, and summer vacations all mix. Hello, I'm Chris William. Welcome again to the most widely watched program on Carolina business and public policy for almost 25 years now. We will host 4 premier economic scientists to gauge our current state of affairs. We hope you'll stay with us.
Major funding also by Novant Health, bringing you world-class technology, clinicians, and care when and where you need it. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. And by Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. On this edition of Carolina Business Review, a mid-year economic report with Frank Hefner of the College of Charleston, Rick Kaglic from the Federal Reserve Bank of Richmond, J.H. Bryson, Ph.D. from Wells Fargo Securities, LLC, and Joseph C. von Nessen, Ph.D. of the University of South Carolina. And now, here's Chris William.
Hello, happy summer, guys. Welcome to our program. And midway through 2015, that's hard to believe. What's the biggest surprise for the economy this year, or business, or anything related to activity, economically or business, or even in communities? What's the biggest thing? Anyone? Joey, you start.
Well, I think that we have, certainly in South Carolina and to some extent across the country too, really transitioned to a period of economic expansion. We've been talking about this as a recovery that's been going on for years, but in the last 6 to 9 months, depending on which region you're looking at, we really transitioned to a genuine expansion, meaning we're growing, we're moving into new territory and seeing rates of growth that we haven't seen since 2005 to 2007.
Okay, so you're saying, so you're saying that you had faith there was expansion, but now there's empirical evidence?
Well, we're seeing, we saw a recovery and we saw continued increases in terms of rates of growth, but now we're beginning to see that rate of growth extend beyond what we're used to and what we saw between again 2005, 2007 during the early 2000s. So we're moving into a more genuine period of expansion, and I think this year we've seen some markets come back. Housing, for example, has been somewhat of a surprise in South Carolina. New construction has come back. Housing demand has been creeping up, but that's taken a big turn in a positive direction because consumers are in a better position. There's more employment growth,
right.
And households have a more net wealth, and so the housing market is coming along because of that.
Okay,
I'll take issue with that, of course, and that is given that the first quarter we had negative GDP growth. So even though we are in a recovery, I would characterize it more as a fragile recovery. There are too many things on the horizon, and I'll leave you to discuss the international scenarios on the Greek issues and all that kind of stuff, because those are looming issues that could tip us the wrong way at almost any point. That's what I found surprising. I mean, to say bad weather did it, how does bad weather stop an entire economy? And my sense is that I used to be very optimistic about how resilient the U.S. economy could recover from things and adjust. And it seems to me now we've just been kind of stagnating along, so I'm concerned about that.
So are we a terrorist attack away from a contracting economy? Is that what you're saying?
Yeah, I think so.
Really?
I think so. I think that is very that could be a likely scenario with two stars lining up at the same time, unfortunately. And then on the other hand, we're looking at things like the decline in oil prices was considered as a positive event, because it would give retail people more money to spend on retail sales, and retail sales just finally rebounded this month, and it took that long. And now that, so it didn't occur. But on the other side, the decline in oil prices has really hurt the fastest growing industry in the United States, the oil.
Yeah. Rick, what does the Fed think?
Well, first of all, I speak for myself and not the Fed. But I'll tell you, what I find most surprising is how seemingly opposed Frank's assessment is from Joey's. I think I would fall probably somewhere in the middle. I don't think the recovery is fragile. I think we've got a recovery that's really on solid footing. However, I think one of the biggest things that's surprising to me is that we're not seeing a bigger number in terms of output growth, given how solid it feels. So that's kind of the surprising thing to me.
And wages have been fairly stagnant. We're beginning to see a little bit of wage growth, but that's been, I think, the biggest concern that I've seen. Certainly, and that goes back to low productivity. We're having relatively speaking, high levels of employment growth relative to output gains.
So, Jay, from a global perspective, looking back in domestically and on the Carolinas, what do you think?
Well, I think, I'm a former Fed guy, so I'm going to side with Rick on this one. I mean, I'm kind of in the middle here as well.
Yeah.
But I don't think I think the economy is certainly on a sustainable sort of path right now. The first quarter GDP number, the negative number, was a little bit surprising. And, it's more than just the weather. It has to do with the cutbacks in the energy sector. It has to do with the strong dollar. Everything we know about the second quarter so far looks to be pretty strong, and I think this expansion will certainly continue. But I think what is interesting is that the cutbacks in the energy sector, how fast they came, and it's only a slower sort of build in terms of consumer spending.
You know that old joke about, even if you took every economist in the world and laid them end to end, they still wouldn't come to a conclusion?
No, well, we got four of us and probably 6 opinions here.
Well, let me come back to it, because there's a theme here, and you all even maybe not talked about it directly, Joey, but the term energy and that sector has come up, and we know that's a big factor in an economy. Has the energy sector, given the low cost of natural gas, given the dramatic increase in alternative fuels, given the new nature of how people view using energy, is there a secular change in that business?
Well, I'm not an expert in that area, but I will say one thing that has worked well in our favor in declining energy prices, and that has been low inflation expectations. And so that's worked out fairly well for
Is that
us.
because energy has been down? It's held
Energy's
down
been,
inflation?
That's definitely.
Would the Fed, I'm sorry to interrupt you, Frank, but now would the Fed, but I've got to, because that's the only way to do
lean into that one.
Would the Fed consider a different formula or a different observation now that there's been this big change in energy about how energy factors into a general inflation number that they would use, that you would use in adjusting rates?
Well, first of all, from my opinion, I think when we see the energy prices decline, that's going to be reflected in the broad measures of general prices, right? That is an input to the consumer price index, the personal consumption expenditures, deflator, whatever the case may be. But also, we've got to keep in mind that it's the changes in prices, not just the level of prices that we look at when we're talking about inflation. So it's not just what has happened. So we've seen the declines in energy prices. They have, in part, in addition to some declines in import prices, have kept downward pressure on prices. But ultimately, those prices stabilize, and then we move on from there. And that's what we're going to be looking at going forward.
And keep in mind that energy itself, in terms of the CPI, is a relatively small component. It's only like 5 or 6% of the overall thing. Now, it may affect other sorts of goods and services as well, but we are a service producing economy. And so the point here is, we see these dramatic declines at the pump, but then when you look at like a core CPI or something like that, it has had very, very little sort of effect there. So later this year, assuming the oil prices remain stable here, the 0% rates of inflation, overall inflation that we're seeing right now, it's going to go back up to more like 1.5%.
Yeah, Joe, I'm not going to ask this question. I'm not going to be like a lawyer and ask this question until I find the right answer to it. But Joey, I want to come back to energy. Is there a secular change in the DNA of the energy industry in the United States?
Well, I think, again, I would just go back to the points I already made, which is that it's a relatively low factor when we look at the CPI overall, and that we have to look at that in perspective with the overall economy and how that's affecting inflation and the extent to which it could augment that going forward and change where we're headed. But right now, again, it looks like that's not happening.
Yeah.
Well, I think one thing we have to realize, a lot of the energy boom took place in firms and locations that were quick entry, and unfortunately, we've discovered quick exit also as prices dropped. So the next question is, if oil prices have a rebound, would there be quick entry into those areas again to extract some of the shale oil and things like that? And I think that would happen. And given that, the bank just came out with an interesting report on the amount of capital investment firms have been doing for the last couple of years. Non-financial corporations have really nice balance sheets right now, and they've been doing a lot of investment. I see this as a very
capital
investment. I see this as a very positive sign for increased productivity and long-term growth, but not for the next month or two, obviously.
Is that kind of a one-off, the capital investment and productivity gains? And I know that was a Wells Fargo report.
Well, we certainly haven't seen the productivity gains yet. I mean, hopefully that will come. There's this secular stagnation hypothesis out there because we didn't invest a lot over the last few years, that now the economy is going to stagnate. I've never really completely bought into that sort of prognosis. We are starting to see capital spending starting to pick up a little bit, but we're certainly not back to where we were, say, back in the late 90s or even in the last expansion as well.
And I know this goes a lot to what the Fed's going to do, Rick, and I know you can't give us any forward-looking comments about Fed's going to raise interest rates or not. Not asking you that. However, is there, everyone's talked about what's the Fed going to do? Are they going to raise rates? How can they keep money this cheap for this long? The longer we go without some action by the Fed or by the markets and having money as cheap as it's been, low interest rates, in other words, doesn't that create a bigger and bigger problem when, where else do we go besides lowering interest rates and having such cheap access to cash? Hasn't this pushed up markets into kind of bubble atmosphere?
I don't think I would agree with that. It has pushed the markets up into bubbles. When we're looking at an exit strategy, Chris, we're from where we sit currently, we're talking in late June here. I think everybody knows that the time is drawing nearer when the Fed is ultimately going to remove that policy accommodation. But we're going to be looking at that purely from the perspective of the economic outlook, not necessarily what's happening in markets. Certainly they matter, but in as much as they matter to real economic activity. And there's been this kind of tension over the course of the last 6 to 9 months where we've seen probably better than expected improvement in labor markets. The unemployment rate's now down to the lowest level that it's been since middle part of 2008. We're seeing job gains of 250,000 plus on average over the last 12 months. But then on the other side of that, you take a look at the inflation picture, and inflation remains too low year over year. And that's due to a couple factors that we've talked about: the lower energy prices, the lower import prices. I think those are transitory. I think ultimately that we're going to move back toward that 2%. But I think the Fed makes the move. They're going to be watching closely and assuming that the labor markets continue to improve as they have over the last year. I think they're going to make the move when they're relatively confident that inflation is going to move back toward that 2% target.
Yeah, okay.
Speaking of unemployment, since South Carolina had a slight uptick recently, and yes, you had a great comment on that in terms of labor force estimations. And as you point out, and a lot of us already know, there are only about 60,000 households in the employment survey nationally, and that translates to approximately 900 for South Carolina. If you're looking at 46 counties, we may be looking at they're calling up 20 people in Berkeley County and saying, "Are you working?" And that's how we're getting these unemployment. It's a pretty thin number, especially when they're trying to figure out and infer, would you be working if there were a job? That becomes even more dicey many times in trying to interpret those kinds of numbers. But on the other hand, we have seen, at least in Charleston area, since before the recession, an increase in not seasonally adjusted, so we don't have to play with that kind of number, over 30 to 40,000 increase in the labor force. So that's a long-term trend that we've seen upward. So people are moving into the area. It's not that they're just coming out of having been out of a job and coming back in. So we've seen some solid gains.
Well, hold on to that, because this is going to take us in another direction. Economic development for both North and South Carolina has been just not top of mind for politicos and those who have an opinion about economic development or economic incentives, but it's also one of those drivers for the growth and development of both states. Next week on our program, we're going to talk to the chief economic developer in North Carolina. His name's John Skvarla, and he is the Secretary of Commerce for North Carolina. He will be on our program program. And then in 2 weeks, Secretary of South Carolina is on a roll and has been on a roll, hitting home runs along with Governor Nikki Haley. His name is Bobby Hitt, Secretary of South Carolina. He will be on our program in 2 weeks and promised to be very interesting dialogue. So let's talk about economic development. Joey, I'll go to you since I so rudely cut you off. But economic development. South Carolina has been at the top of their game, clearly. North Carolina has been struggling to rebuild their brand and build momentum. We'll come to that in a second. So, South Carolina, if this were a 9-inning baseball game, what inning is South Carolina in the momentum and the growth and the expansion of its economic development wins and its model?
I think we're pretty far along. South Carolina has really done a good job of making a name for itself on the global marketplace in terms of a hotspot for global manufacturing. And that's becoming more the case every day as we see more major announcements, major companies coming into our state, Volvo being the obvious most recent example. And there are a lot of advantages to being in South Carolina and workforce development, just to name one that Volvo has named as a primary reason that they look to South Carolina. So I think we're coming along very well. Again, we're being noticed internationally. And we're moving in the right direction. We've got the automotive cluster and an emerging aerospace cluster, both which are doing well throughout South Carolina. Charleston in particular is now seeing more automotive growth in addition to aerospace. So there are a lot of good things happening in South Carolina, and I think we're pretty far along.
Yeah, go ahead.
I wanted, you use this baseball analogy, and it doesn't take home runs to score runs. Right? People can hit singles and still score runs. And when you take a look at what's happening in North Carolina is not doing all that bad. We're not getting the big name scores, but you take a look at job growth in the state, somebody's creating jobs here. And job growth in North Carolina is stronger than the national average, like South Carolina. Right. South Carolina is certainly doing a little better. So if we take a look at its North Carolina versus South Carolina is growing a little faster, but you take a look at the bigger picture of things, North Carolina doesn't seem to be doing all that badly when it comes to recruiting jobs.
So why do you think the perception of the Tar Heel state is so banged up when it comes to economic development?
I think there's a couple things going on. It's going through change. Number one, when we had the first time in more than a century when Republicans controlled everything, they did things a little differently. I think the pieces are still falling into place there. Whereas in South Carolina, you didn't have that kind of disruption to the economic development infrastructure.
Yeah. Right. Well, I think when you ask what are the surprises, I think the Volvo announcement was a surprise for me. And that was just because I had thought along with some other people that, once you have a BMW, do you get another large automobile manufacturer in the state? And sort of the thought for a long time was no, but in actual fact, now we have a BMW, we have Mercedes, which is expanding, and now we have Volvo.
Well, so Detroit did it.
Yeah, and Alabama and Mississippi.
Yeah, Alabama, right. So the question was, would we be able to match that, and what would we have to do to match it? And apparently, we're managing to do that fairly well because we have a lot of the pluses that they're looking for.
The other part of this debate around economic development is incentives. I mean, if there's anything that makes headlines, it's whether a state should do incentives or not. Jay, should states do incentives? Is that make sense?
Well, so my opinion on that is I think incentives may be a little bit overblown. I'm not saying they're not important. I think they are, but I think they're a little bit more marginal. And in other words, I think some of the bigger picture sort of things are more important to companies. I mean, Joey mentioned it earlier, workforce development. Or if you look at South Carolina, you've got supply chains there and things like that. So if you have that infrastructure in place, I think that's going to be important to businesses. Now, maybe the incentives push them over the goal line. Okay, but if you're comparing one state that has incentives but no underlying infrastructure to another state that doesn't have the incentives but a ton of infrastructure, I'm not convinced that the state with the incentives is going to win all the new business there.
So Joey, I mean, you've done studies for the state of South Carolina and specifically to the Boeing win and everything around involved in that. Isn't there some merit to those who say that those that think, this is not going to be completely accurate, but those who think more fiscally responsible, that it's not as responsible to stroke big checks for big manufacturers, that actually that costs the state more in the short term and even in the long term?
Well, you get a debate between business leaders that I've seen, between those who are looking at, and you've got to look at both sides. One case in which we're a state trying to recruit businesses to develop clusters, and which leads to more consistent growth in the long run. So it's really South Carolina sort of versus other states. And on the other hand, you've got companies in South Carolina competing against one another. And so those in more rural areas, for example, will say, well, we may not see as many of the benefits from these larger companies coming into the more metropolitan regions of the state. And so where's that trade-off? So that's hard to say. I mean, I agree that incentives matter, but they are one piece of the puzzle. And there are a number of reasons, a number of factors why businesses are coming to South Carolina. And it's hard to do a cost-benefit analysis on a lot of these. And that's the other thing, is we don't know.
Why is it hard to do that? If you get these published numbers, why would it be hard to figure out if it's worth it or not?
Well, we could look more carefully if we had those numbers, but the bottom line is we don't. We don't know what the true incentive packages are. And so it's very hard to look at that.
Disparate agencies are involved in it. And the other aspect is we don't know how many of the jobs are going to in-migrants versus people that are already in South Carolina. But I agree with Jay in the sense that the incentives are at the margin in a lot of cases. If you need a port, there's no incentive that's going to compensate for a lack of a port. If you need an airstrip, it's just not going to happen. So, but the question then becomes transparency issues, and also would there be a better way, for example, wholesale tax reform instead of spotting it to specific industries, for example? Would be my preference, for example.
Let me all ask you this question. In a perfect world,
yes.
If would incentives matter if both North and South Carolina fixed, and I use this term very holistically and very globally, if North and South Carolina fixed their education and fixed their transportation issues? Wouldn't those two big issues be enough to overshadow any kind of incentive check that they'd have to write? Wouldn't people be more, wouldn't companies, recruited companies, be more inclined to come to that state if they had those things fixed?
I just finished a piece on maximizing the impact of the Boeing score for one of our publications, and what I ended on was how important it is to fix the education piece of it. Because when you take a look at some of the scores, comparing South Carolina's educational outcomes versus national averages, or more importantly, compared to competing states. So you've got certain states that are competing for the aerospace cluster, like Alabama, like Washington, like Texas, a couple others. And South Carolina doesn't score very well, especially when it comes to the STEM metrics. So I think if you can improve your educational system, it goes a much longer way toward economic development and recruiting than incentives would.
Yeah.
Then you have the chicken and the egg. If you have the jobs, people will try to get the education. Without the education, you don't have the jobs. And so we've always had that battle in South Carolina. And we probably will continue. But the interesting thing about getting more companies coming in, for example, is it does increase the demand for higher education, better education, different education, and hopefully the supply will then come about.
And that's why the coordination is important too, between the state leaders and these companies in trying to facilitate workforce development that meets the needs of these companies coming in and doing it in advance. And so it's important to look to other states, see what they're doing, what their workforce development looks like, what their workforce is doing, and how do we meet those needs.
Now, are you running for public office, or are you actually an economist? Because you're pretty good at articulating that.
Well, it's one thing to say, one thing to do, too.
Yeah, sure.
Joey brings up a very important point, because while you may lag behind in some of these important educational attainment measures, one thing that I think North Carolina and South Carolina are very good at, and I think everybody at the table will agree on, is getting people trained for jobs that are being recruited. So whether you're talking about Trident Technical College down in Charleston, or Guilford Technical College up in Greensboro, or out in Asheville, wherever the case may be, we're doing a very good job of training those workers for the jobs that are coming. And these are good jobs that are coming.
And for some reason, when we look at incentive packages, that training cost becomes an incentive to the firm. And I've never understood that. That really is, if you want to call it a subsidy, it's a subsidy to the student to get the job. Sure. And it's a sense of that's what we should be doing. So how much of the incentive package is stuff that the state should be doing already? A highway, education, things like that.
We didn't. We're out of time, guys, and we didn't even talk about transportation, how critical it is for both states, and especially South Carolina.
We're lagging terribly there.
Yeah, more to come on that. Guys, thanks for being on the program. Good to see you again.
Thank you for having us.
Welcome. Joey, come back.
I will.
These guys didn't scare you away. Okay, thank you.
Thank you.
Thanks for watching our program. If you have any questions or comments, we always want to hear them. Go to carolinabusinessreview.org. Sorry it's not shorter, but carolinabusinessreview.org. Until next week, good night.
Major funding for Carolina Business Review was provided by the Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Novant Health, bringing you world-class technology, clinicians, and care when and where you need it. Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by viewers like you. Thank you. Promotional consideration provided by Business North Carolina Magazine. For more information, visit carolinabusinessreview.org.